Hi, let's talk about Curis, a biotech company that engages in discovery and development of drug candidates for the treatment of human cancers in the United States. Market cap 890 million, and for information should not consider as investment advice. As usually, we start with simple Wall Street. Revenue is forecasted to grow almost 30% per year. Earnings have grown 15% per year over the past 5 years, which is very good, but currently the company is unprofitable and not forecasted to become profitable over the next 3 years. Shareholders have been substantially diluted in the past year. Also, earnings are forecasted to decline by an average of 16% per year for the next 3 years. Share price went pretty much up since some of the product updates that they made. And if you can see here, for example, last year there was very like X8 on the CEO change, capital raising, some of the product updates. But yeah, as usually the biotech made it peak on the mid-February, but this company made 15th of January, then another one on the 22nd of March, and currently it's up to this day 67% up. So be careful, it's highly volatile share price. It could bounce back and drop to some of these levels. I'm not currently like sure, but there's long-term curves and short-term. So usually we see here that if it's pumped, everyone should be very careful and look closely at the volumes. So in the 8th of December, volumes were around 300 million, and currently it's getting up again. But market performance, huge returns, 1 year return 1000%, phenomenal. Industry, of course, beating the industry, of course, beating the market. Long-term price volatility considers highest, so that means if you enter at this price, there's high possibilities to return to around $10. I see here, so there's a kind of support level somewhere around even 930 or so. And yeah, valuation side, unfortunately, simple Wall Street does not have any price targets, but tip ranks showing that $17, so that's very nicely, it's very close to the tip ranks price target, and it has 3% even upside. In good scenarios, 12-month forecast, the price could be reaching $19 per share, and Market Watch has pretty similar, so 17, 20, and in good scenarios 19. And of course the future growth for the company is not so well forecasted to decrease by 16% annual earning growth, and the earnings per share is not forecasted above the EPS 0, so it's long-term investor like invest idea. Past performance 15% historical annual earning growth, which is very good, but unfortunately the company is currently unprofitable. And financial health side, so let's look at so they had negative shareholder equity, which is very risky and very serious situation, but now they raised some capital, and currently they lowered the debt, which is currently less than 1 million compared to equity 130, and the cash level, so there's a capital raising 168. So now they have some of the cash debt to equity ratio is less than 1%, which is very good. But for the company, there's always an option. Yeah, the first option is to raise capital that lowers the percentages of investors. So if they double the stocks outstanding, and if you own like 1% of the company, it becomes to half of it, so 0.5, and that is not so nice for the investors. And yeah, the second option is to raise the debt level, but if the company raises the debt, so there's another problems that a company faces. For example, if the interest rates goes up, it could be hurtful for the company too. So it's much easier to put the shares, raise some capital, and the money goes straight to the needs. Balance sheet pretty green, basically very good. They're not paying dividends, and ownership. So let's have a look. Yeah, so there was individual, not so significant amount of money, like 25,000. Sold, max price $10 per share. Ownership breakdown, so mostly institutions. That means it could be more volatile than the average shares where general public holding mostly. Hedge funds 16%, general public 14%, VC firms 8%, public companies 6%, insiders 0.3%, top shareholders, so there's actually many of them added pretty significantly. I see here 0.72, asset management added 81, and it's currently, yeah, last reporting holding date only a few months ago, so January, December. Okay, so there's some of the not so fresh data. For example, we see here Vanguard Group added almost 170 by last reporting holding date, 31st of December. Let's have a look at the, so 21st of December were around $8 per share. Okay, which is very good. And I also, for the biopharma companies, biotech companies, there's a biopharmacatalyst.com. So there's the drug pipeline, and they got some of the approved drugs. But let's have a look at the simple safe dividends first. So shares outstanding keep increasing, but the total sales are pretty much on the same level. But anyway, they have sales. They are selling this product. So there's a Vismo Jeji approved Jenner. So they're like selling more than 8 years. So currently 9 years. There was today's news. Curis reports updated data on the 2 abstract for CA4948. So this is the actually the drug accepted for presentation European Hematology Association 2021 virtual progress. So yeah, there's some of the improvements happened that made the price talk pretty nicely up. So there's how much, 66% up, which is very nicely. But this is one of the drugs that made the sales, and that is very nice. And there is also some of the upcoming catalyst. And yeah, as I told you, there's risks that the potential of the stock. So does it go up even further or decreasing? It's hard to predict, but I think it could drop to the same level as we've seen this year. And yeah, so there's this. If we open up the max, so usually we used to see like 1 year, so yeah, the price were at around $1, and then it pumps up 1000%, as we can see here. But if we open some of the bigger frames, so okay, it reached same highs as it was 5 years ago, and I know maybe some of the investors brought this stock 5 years ago, hopefully hoping for it could be like $40 or $60, but yeah, in 2 years minus 70, 85%, 90% even. So be aware of the volatility. And if you open the max, yeah, so there was, yeah, so there the company had own ups and downs, but it's founded in 2000, so be careful. And the investing.com summarized the stock for long-term investors as a strong buy. And as usually, in this section of the video, I read the comments. So I had some money invested in this randomly. I found it by mistake, but without that dropping that, I made my $50 go to $10. So I would have to know about how cheap it is now. I invested some $150 that I would have otherwise spent. I know this is a little amount, but this is just I kept on stash. So this is pretty often I see some of the same comments. People are not losing money, but they're losing like virtually the capital that they invested is going down. So what is actually happening? So well, what was the stock? So let's have a look. 1 month, yeah. So you brought. Oh, so you didn't go to dollar. Yeah, so $50 to $10 minus 78, 79%. Yeah, that's a stock market. Pretty much every mid or even small cap company have the same volatility on the market, and yeah, it's usually those early stage investors are making the smart money, and those who invested in early stages are profiting more. But there's also correlation. If you like you mentioned the $150, so usually if you have less than $1,000, usually I recommend to educate, so buy some courses or just learn on this, like something about stock market. There's a material on a free basement, so there's a lot of free material. You could start with that, but firstly you have to make your income more bigger. So investing this money in a stock market is a little bit dangerous, because yeah, you could be like back holder, as they used to say. um, I personally don't like the term, but the Vanguard CEO said like buy everything and hold forever. I think something like that. Buffett says, or other Vanguard bogle. But anyway, the your amount doesn't not like, and you mentioned that I would otherwise spend. So you could, like, if you failed, the what is fail? First attempt in learning. So you learned, you spent it $150, so pretty small amount, and you learned a lot of the stock market. So there's a people who investing like millions, and they lose like same minus 80%. I heard some of the stories. There's like 20 million invested and they lost all the capital. So there's nothing to shame about or something, but this amount of money is not so significant. So I prefer like so there's a better way to lose a small amount and learn those drops, this volatility, that after that you could invest in more stocks with fundamental. So this is volatility. Even these stocks that are in a S&P 500 are volatile, but they're less volatile than the stocks that I research. So for example, these stocks with small cap companies, they could possibly give on return over 500-600%, and that is pretty normal. So this stock made 1,000 of the return. But if we look for the bigger frame, for example here 3-year 240, okay, it reached on the better side 5 years 18%. But anyway, one year return 1,000%. These stocks are less likely to do this, but they're less likely to drop so significantly from $50 to $10. So you learn that if your risk-taking abilities allows you to invest in those stocks, hoping for bigger returns and getting some of the minuses, you realize that there's a potential. If your risk-taking ability is not allowing to this volatility, you can invest in the stocks that are from S&P 500. And currently I'm not recommending to invest in any of these companies because they could be recession or stock market correction, because it's all the time on its peak. But anyway, if we watch 1 week, like there's a neutral, so there's some of the red areas, and financial feeling good, so there's green because of the banks are nowadays allowed to do buybacks. That made a little bit of the growth and better returns. But anyway, these are less likely to go and perform like huge returns. They're most likely not to drop these huge percentages, so minus 80, that's huge. And some of the companies, after making minus 80, they could drop even more, like minus 50%, minus 50% down to bottom, so 0.01. There is a stock, like penny stocks, that are in the stock market that are worth 0.00 something dollars. So be aware of that and try to learn much more of the stock market. Read about diversification, read about diversification on time, define your strategy. So are you investing long term? Are you a trader? Are you an investor? If you're an investor, like find those stocks that you're willing to invest in. If you're a trader, then there's a statistic: 95% of the investors lose their money within a few years. Depends on the stock market, in which phase it is. So if it's correction going on, there's mostly people are losing. After correction, if you're getting invested, you think that there's because every sector is growing after correction that we saw in March last year, where like if you open up 1 year return, so with those returns, any could be investor and the trader, because everything is growing. But when this turns to red, there's absolutely like there's the harder times. So there's easier times when the money is pumping through the stimulus checks, through the company helps and buybacks, many of the government help. But when interest rates raise, when the helicopter money will end, there are gonna be the harder times, and yeah, the correction will be there, but nobody knows when. So the best strategy is invest. For example, every month you define your strategy, define your sum of the how much money you could invest every month from the salary or from whatever income is, and just buy whenever there's correction, whenever there's going up. And there's a statistic that those investors are making money and making much better than traders. Anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.